Hello, hello, hello. It is Sunday, nearly 5 p.m. Sunday, the 2nd of August, 2020. So just taking a look at the dollar currency, the currency basket, as well as just kind of majors and minors, having a look at the US dollar here, starting off with that. And I'm very happy to see that it has broken outside of its range. It's also been trending very, very nicely, which has provided some solid money-making opportunities on the lower time frames. There haven't been any swing trading opportunities, but that will come in time. So a key thing for me really is that it's broken below this kind of 94.50 and 94 level, and now looks pretty much headed towards 9100. It could still largely be within a range on a much longer term time frame. And so it can turn around pretty much any point. I've seen in the past, I've kind of seen it hit these lows. Just if I go in and look at a single chart, I can just see that it has reacted to kind of random points here. And going back, looking through, 10, 20 years of it, there's no real clear levels. The next most significant level of support for me at any rate is down at 9100. So taking that into account, it makes the most sense, I think, for this to continue to head that way. Looking at the weekly, it's a little bit overextended on the weekly, and a nice little pullback would be pretty cool. I think it's overdue for that. If I go down to the daily, we've had a nice long run. We can, similar to the previous move, we can continue further. And so if this does set up, this is a nice bullish candle on Friday. So if we do get a retracement this week, it's reasonable. I just see here I've done a fib level from the most recent high up to 94.50, and I've highlighted that area kind of where the moving averages are. So this would make a very reasonable area for a retracement on the daily before resuming the trend. So that's really on my watch list here, is to look for a shorter term retracement and then a continuation in the coming week. Heading across, having a look at the euro dollar. Let's go and have a look at this on the monthly and just set it up this way, go through each chart. Now, same thing again. It's also starting to slow down a bit around 1.18, and looks fine on the weekly, not ridiculously overextended. On the monthly, we've had bigger moves before, but it is coming into significant resistance. So again, on this one, a retracement here and a continuation would be kind of first on my plan this week. And interesting enough, looking at sterling against the US dollar, I still think there's room to move. I don't think there's really much until 1.33. And so even though there is some bearish candle which could indicate a retracement, I don't really see any significant levels until we get a little bit higher up, which leads me to think that there's still more room for this to go if that is the case. But a retracement and a continuation would actually be very healthy and make complete sense. For swing traders, anyone who's in this trade would be able to kind of nice update their stop loss, or at least that's what I could do if I was swing trading. And then having a look here at Aussie dollar against the US dollar, this is kind of divergence behavior, which would imply a bigger retracement, perhaps down towards the 7,000 level or 0.7. It's had a very long run on the weekly without a deeper kind of correction there. It doesn't look as strong, and it is actually at a key level. So it kind of makes sense to me that price would come back down a little bit further as well. It's a bit due for that. Kiwi dollar coming down to the previous highs, even down to this level down here, which is support and resistance towards that 0.65. That would be fantastic. I'm just going to mark that in now. That would also make very good sense in terms of that, and they are most likely fib levels as well. So I'm just going to mark that, and that would then be the one for me. Right, now having a look at dollar yen. So dollar yen, I just noticed that it is now at the bottom of its range. This is historical support, as well as some resistance. Actually, that level could go down a bit lower. I like that nice number of 105, but it could certainly drop a little bit below that. This could ultimately end up, if the Japanese decide to push their currency back into that range, they might do that. But the overall flow, especially looking at the moving averages, is to the downside. I would love to see it break out of this range, because it hasn't really been outside of that range, even going back to 2016. So I'd really like to see that actually happen. That would be quite significant. I think that, taking into account with precious metals and gold, for example, going to all-time highs, seeing the US dollar starting to break down, and seeing other currencies start to break outside their range. However, there is one issue, which is there are murmurs of a Japanese intervention. I don't think they really wanted to go below this level much, and so there are rumors of that. And the problem with that is that it actually, from experience, means that for me, dollar yen is, or Japanese yen is just going to go off the table. Until, in other words, it's just not become, it's not really going to be an option until something happens. So actually, if anything, there's now more reason for me not to have a look at this as a particular currency to trade, in fact to ignore it. This is the daily now, also indicating a potential move back up to 106. 60 for a potential then continuation down. But this means that this is now on a kind of a danger watch list, and interventions are are to be taken very, very seriously. The weekly candle could also ultimately turn out to be quite a bullish rejection candle as well. So I think that's what they're going to want. And then having a look at dollar Swissy, absolutely well overextended. It has been beautifully trending, and actually for those of you who are new traders, the Japanese yen and the Swiss franc used to be amazing to trade going back to 2012, up until about 2012, and then it got a bit twitchy, and so there is a real threat danger here. The SMB also talking of intervening. They really don't want their currency to get too strong, and you know they've done incredible things, not good things, to the stability of the currency market in the past. So they might do something. They might just bank on the threat of doing things, but the problem is that if they do something, it's almost certainly likely to be very damaging to everybody, which I never really understood. They seem to be very smart in every other way except this one thing. And so they've now obviously started to break outside of a range that they've been comfortably in since 2015, which was actually when they last depegged their currency, and this is where they intervened. So in both cases, they did extreme damage to the banks, to brokerages around the world, to currency, to clients' accounts. You know, the kind of situations that not even a stop loss could guarantee a stop loss could probably help you out of that. So for me, now that they're starting to talk about it again, I am just absolutely I think I'm just going to not touch these with a 10-foot barge pole, which actually reduces the number of currencies that I can comfortably trade quite a lot. But also here's the other problem: if they do intervene, it'll actually impact every single other currency on the board. But I still think I would prefer to. So what I'm going to be doing now for the next 6 months or more is absolutely ear to the ground when it comes to listening to the SMB, to the Japanese central bank as well, listening to any talk or threat of intervening to weaken their currencies, because I will take those very, very seriously. And so that is just something that I can speak from experience. Okay, so there we go. Let's have a look at dollar CAD. So basically with dollar yen and dollar Swissy, I lean towards them ultimately this week at least, taking that retracement. Ideally, I think they would prefer to have that. But again, we've broken out of a range for several years. It might want to go like gold. Gold was in a range from 2013, and it might want to continue to trend for a while without too much of a break. So if we look here at dollar CAD, what am I looking at here? Back down to within this range. Of course, the moving averages, if I just enlarge it here quickly, it's coming into a potential area here for some kind of a weak resistance that might ultimately turn out to be support again. It could then take a bit of a bounce up to the upside. Again, the potential here for a double bottom forming on the weekly. And then finally looking at it on the daily for the same kind of reason, there just might well be some opportunity for this to head up, at least back up either into these lows if it's going to continue down, which could then build up to a breakout. So they could, if I just draw this in, this is going to be my level of support and resistance, as well as potential Fibonacci for price to turn around and continue down. There could also be a bit of a flat level breakout that's forming here in the much longer term, sort of watch price kind of work its way and then break through. Okay, I'll keep an eye on that. And so this week, again, just seeing price perhaps consolidate in a small retracement before continuing on is really my plan A. Plan B would be for it to just not even take that break and obviously continue on. But I'm leaning towards, based off the charts, I'm leaning towards it doing a retracement first, and that's pretty much it. And then, so that just means there might be some swing trading opportunities later on in the week, and also on the lower time frames, I'll probably be keeping an eye on that 4 hour, waiting for price to finish its retracement, and the 2 hour perhaps to resume that trend. And that's it. That's my plan for this week on these pairs.